Well, in the beginning, just like when you're looking at a new baby, the new baby probably knows a whole lot more than we do, but it's fresh, right? And
Hmm.
so typically there is gold behind it because this is a trust mechanism. And again, gold holds its value over time. So the public can actually trust it. But since the public is not managing it, but it's managed by governments and corporations, private corporations, because the person that makes the choices that has a negative impact on a lot of people cannot care about that impact. So that's who's really heading this whole system up. And over time, they want to do this and rob you of your wealth and your work slowly so that you don't notice. And you made the statement earlier, well, I didn't really need to pay attention to it a couple of years ago. But in reality, since the day you were born, that dollar has been losing value. And I don't care how old you are. At the moment that you are born, at the moment that that dollar in the US is issued, it has the most purchasing power value that it will ever have. And so over time, so it's really used as a wealth transfer mechanism. And the big experiment in this life cycle was in central banks' ability to control the rate and speed of the inflation. Because if they can keep it at that 2%, they're still getting it, but you're not noticing it because it's so small. Now it's much bigger. But the tool that they use to regulate that are interest rates. So if you stop and think about what happened with interest rates when we transitioned from a gold standard to a pure debt-based standard in 1971, the central bank, Paul Volcker, pushed the interest rates that they can control all the way up to actually 21.5%. So they had this big, huge ramp room to work with. And every time we would hit a financial crisis, they would drop interest rates down about 5.5 to 5.75%. Now, when you do that, interest rates are lower. That inspires people to borrow and to spend. And so that makes it appear like it stimulates the economy, but you're doing it with debt. Unfortunately, and like I said, I came to ITM in 2002 because my formula said we're at the end of this currency's life cycle, right? But I mean, things, just because you say something doesn't mean that you snap a finger and 2 seconds later it happens. But I got technical confirmation. I could be off by a day or two, but I'm pretty sure it was October 9th of 2002, and I came to ITM in June 28th of 2002. So then 2008 hit. When 2008 hit, I knew, and I've been saying since 2008, the financial system that we had known died, and it did. And then the central banks, though all of it is a big experiment, but then central banks started massive money printing at once. They've been doing it all along, but again, at the low enough level that you don't notice it, you being the public doesn't notice it, right? Dropped interest rates down to zero. Now they have lost their biggest tool. And every single time since 2009 that any government, any central bank rather, has attempted to raise interest rates, it has been a big fat fail, because what they really did with all of this money printing and all of this cheap credit, which the corporations get, and they get to take advantage of it. You and I don't. What are credit card interest rates? I think they're still like 28%, even though those banks are getting any money they want for 0%, right? And so they don't have that tool anymore. So if you ever hear me say they are out of tools, yeah, they can just print more money and expand their balance sheets. Like, you could take on more debt. You can do it until the credit card companies or the banks or whoever you're borrowing from says, no, I'm not giving you any more money. You can keep doing it and keep your real circumstance hidden. But we're at the point now where there's no, officially, there's virtually no purchasing power left in the dollar. The only reason why you can still go to the store and buy something with it is because the general public doesn't fully realize it. But there's no place you're going to go negative. We are going to go to negative interest rates. That's part of the allure for the central bankers of the digital currencies, is because then they can go below zero, which they can't with cash. Cash, at this point anyway, prevents them in this country from going to negative interest rates. But I mean, are negative interest rates at all logical? I mean, you're working, you're saving, and you're going to loan somebody money knowing that at the end of that term, you're not going to get back what you loaned them. On what planet does that make sense? Why would you do that? Maybe for your children, but who else would you do that for, really? The government? Yeah. So we are at the very end of this currency's life cycle, and I cannot tell you when the full collapse or the hyperinflation, because there's not one doubt in my mind that we are already entering a hyperinflationary depression. Why gold and why now? Okay? Mm-hmm. And here it is. Gold is real money. It has been real money for 6,000 years. And that is because of all of its many qualities. But it is rare, and it is also can be divided without loss of value. So it is a good tool for accounting.
Unlike a diamond or something like that.
Correct. Right. Yeah. I mean, a diamond has value, but also they figured out how to make diamonds in a lab. They have not figured out how to make gold in a lab. And both gold and silver have qualities that is used across every single aspect of the global economy. So it does not need a government to say this is money. And remember, if a government can say this is money, they can also say this is no longer money. And we've seen that in recent years. In India in 2016, where they demonetized 85% of all of their currency that was out there. You know, I mean, this is really what's coming.